Good morning and welcome everyone to the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a snowy Denver, Colorado. Yes, snow on the ground on Cinco de Mayo, bit of a brisk overnight. Today, I am pleased to be joined by my friend and fellow Schwab coach, Brent Moores. Good morning, Brent. Did the snow hit you out there in Utah as well?
No, we had a little rain last night, but the skies are blue, and I don't know what the temp is, but it's not that cold. Those who planted their tomatoes early are still safe here in Utah, I think. I don't know, uh, but we'll see.
I'm admittedly a little worried about some of those plants out there. We've had a lot of green shoots the last couple of weeks, so I'm sure that I may have lost a couple. But nonetheless, it is still spring, regardless of what the snow is suggesting. Hey, we're glad to be here, everybody. On Wednesday, we've got plenty to get to, as always. Today, we are joined by friend Scott Thompson here in the chat, Senior Manager, Trader Education, of course. Scott is going to get to comments and questions Brent and I are unable to do so with, but we're going to try and bring your comments and questions into our discussion as we often do. So please feel free posting for the duration of the show. Remember to follow us on X, everybody. Scott Thompson, CS, Brent Moores, CS, and Kevin Horner, CS. A great spot to find us when we are not hosting classes for you here on the channel. We're going to dive right into disclosure so that we can get down to the nitty gritty. So please follow along quickly here. Remember that everything we cover for you is considered informational and educational only. We do not make recommendations. We do not endorse any specific approach to trading the market here. What we will do, however, is utilize technical analysis as we review the areas of the market with you all. But as we share those concepts and strategies that traders might choose to employ, remember to do your own due diligence, build your own plan based on your preferences and comfort with technical analysis, but try not to rely exclusively off technical analysis for your decision making. Beyond that, here in this class, we do take a top-down approach to our review of the broad market with all of you. So we'll start with our largest of indices, work our way through some industry groups, some sectors on the move, and as always, some stocks in the news. And there's, of course, going to be a few of those today as well. So with that, we're going to start us off with the SPX, which seems to be continuing its assault on the upper levels of the market. Brent, that is another gap to the upside in the SPX today. I mean, we can continue to disprove or disbelieve what's happening, but we probably do so, Brent, at our own peril.
This is like a perfect example, Kevin, of where you can't let, I can't tell anybody what their narrative is in their head, but you can't let the narrative in your head override what the market is doing, override the technical analysis. Because if the market did what I thought it would, given the world situation, and I realize there's some more positive reports coming out of the Iran war talk right now. But go back a day. Given everything I see going on in the world, the market shouldn't be at all-time highs, and yet here we are. In other words, listen to the market, don't listen to Brent in terms of what's in my head as to what's going on, and don't listen to the narrative in your own head necessarily in terms of what's going on, because the market can prove you wrong. The market sometimes has its own mind, and that's what's happening. I mean, it's just bullish, bullish, bullish is what it's been. I don't know what it's going to be. At some point, it may be overvalued, and we may have a big sell-off. But from what it's been, it's just keeps on marching up.
Exactly. And you know, Brent, we talk so frequently here about not fighting against what we see, but rather using it to our benefit. And then as we make moves to the upside, it allows us to increase our levels for exit strategies. So notice how speedily rising the 20-day moving average in orange here is, everybody. It's catching up to 7,100. That's still 200 plus points away from where we are, Brent, which means that any pullback to the 20-day is going to be felt. A couple hundred point pullback in the SPX is limited. It's very small percentage wise. And yet traders, if your expectation is only upside and we get a pullback to the 20-day, it's not going to feel terribly comfortable in the midst of it.
Exactly. Also, this is a good example of where we sometimes warn you on that RSI. Just because it gets to the overbought area doesn't mean we're going to have a sell-off. Look how long we've been just hovering right around that 70 level up there. And Kevin, you could click on a 10-day moving average there, and I suspect, it is
Yep.
that's a really strong moving average. We bounced right off the 10, and it's just I don't know what else to say on that. It just keeps going.
Yeah, you're absolutely right. We don't know. Of course, you're getting a 10-day moving average as a very speedy level against which to base risk. A lot of traders will use it. We've been above it for a long time now, Brent. We're getting
Yeah.
to an interesting spot, basically the entire month of April, and now we're a week into May. So you're looking at about 5 weeks of holding the 10-day. Commonly, we'll see these rallies go between 4 and 6 weeks. So we're getting towards the longer end of it where we may anticipate a pause, but try not to anticipate much. Try and only set levels where you would take action. Know the areas where your view would change on things, and that's where you want to set those levels. It's very important to give thought to this along the way so that when it happens, we're not surprised by it, but rather prepared for it. I think that's a big part of our process here as traders as well. So we're getting a little bit of an extension here in the SPX. We're going to see something similar in the NASDAQ 100. Everything we just said, Brent, we can apply to the NASDAQ. In fact, I'm going to go ahead and put a 10-day on there for you instead of the 20 because it's so clean.
Wow. I mean, it's just going that, and this is obviously more tech driven. Hey, look, if you're look how the RSI, by the way, on
Yeah.
that. I mean, we're up near 80 on the
78 and
RSI.
change. Yep.
And so, hey, that's what we have. Look, does it make sense for some traders to say, hey, look, we've had a nice little run. I'm a little worried. I may take some profits. I may lighten up the load a little bit. Yeah, a lot of traders will lighten up the load a little bit, and that may make sense. And then if you were to do that, I'm not saying, the market may just continue to go up and you may be going, well, I wish I didn't do that, but you just never know. But if you lighten up the load, have a little cash, and then at some point when there is a pullback, there will be a pullback at some point, I don't know when, um, that's when you can redeploy cash there in that case. So that's not a recommendation. It's just, I'll tell you what, Kevin, there's times in my life, in my trading life, where the market does have a pullback and I'm going, oh, this is a perfect opportunity to buy. And I look at my account, I don't have any cash available in my account to buy. And I go, why didn't I, I was just been fully invested the whole way. So just something to think ahead about if you want. The important thing is think ahead, think what you want to do, and be
Yep.
intentional about it.
I think that's the takeaway, Brent. I agree. The inevitably when the market gives us our best opportunities to expose new dollars to it, it's when we won't have the comfort to do so.
Yeah.
It's instances like this that are playing into our human nature. We as humans, we want to buy when things look good. This looks strong, but buying up here, if you're ill prepared, can leave us with greater risk. And the truth is, a rally like we've seen at some point will either get a pause or a drawdown. So we need to be attentive and we need to manage our individual positions to our own tolerance for risk. Try to eliminate the outside forces that play on your decision making as best as we possibly can. It's not easy. That's a real challenge for most of us as traders, but trying to do that is a step in the right direction. Plan your spots, know where you want to take action, and then absolutely take action when you see it. Especially if you're giving yourself the steps, the second most important part of building a plan is actually adhering to said plan. So make sure that you're sticking to the game. Now, Brent, we are getting a good pop today in the Russell. The Russell breaking higher after having broken out with a beautiful candle yesterday. I validated it as a consolidation at upper levels, and I think we've just maybe made the measured move target from the range, Brent.
Well, I mean, that's how it works. You got the measure move, and sometimes it pops up that, to work out just perfectly, and a lot of times it doesn't work out perfectly. But that's kind of what we
Goodness.
see there. In fact, we've extended a little bit above that. What does that mean? It means obviously it made a good move, but it also means it wouldn't be surprising if we had a little bit of a flag, if it turns into a little bit of a flag pattern, a little bit of a consolidation here if the bullish move were to continue. But I don't know exactly, but the same thing is true on the Russell, small caps and large caps, really across the cap spectrum. Uh, just we've seen a lot of bullishness there.
Well, Brent, this is getting to a point where we continue to see bullishness in the face of difficult situations. So, first of
Yep.
all, we looked at the 10-year on Monday. I had Scott Durfee on with me, and we were watching the 10-year make this assault on
Yeah.
4.5%, essentially. And we had rallied, and yet the Russell was up. And so the Russell was rallying in the face of elevating
Yes.
yields. And then the last 2 days, we've had yields dropping, and the Russell said, "Great, let's keep running." And so I'm trying to gain some understanding of the story between the two, and it just seems like we're going to take anything positive on the market and we're going to run with it, and anything negative we're just going to ignore, because basically for the last, as I see it, Brent, for the last month now, 5 weeks probably, the market has gone with the belief that the conflict in Iran is over and we're just moving forward. And then today you got positive commentary, and granted, you put as much stock in a headline as you want, but the commentary there was that we are closer to a deal. Well, we've been ignoring the whole situation for 5 weeks, and now you get a positive headline, so we're going to use that to rally. What I'm getting at, Brent, is there is a lot of positivity and a lot of optimism suddenly. Don't allow it to skew our view of risk management. I think that's certainly important here.
That's a very important point, Kevin. The I was about to say when we first started looking at the Russell 2000, well, hey, interest rates are down, but I didn't say it because because then I figured everybody would be thinking, yeah, but Brent, when interest rates were up, it was still going up too. So, you can't attribute it to interest rates on one side, but not on the other side. So,
Hmm.
in any case, I mean, you said it very well, but I do, if the market is a forward-looking instrument, and if the theory of as to why the market has been doing so well for so long in the midst of all this stuff that's happening
Hmm.
is that, well, we're looking forward 6 months or 9 months or something like that, when everybody, people think it's going to be resolved and everything's going to be fine. I mean, that's a fair narrative, but the problem is if we've priced in the move now ahead of time, at some point when the actual resolution occurs, we may see some significant profit taking at that point. I
Hmm.
don't know, but that's definitely something we can see there. And I don't want to, if we're time to move on, if not, but one thing I do want to mention, I should have mentioned this to you before, but I wanted to look at the Fed funds tool here
Ah,
today, because there's something interesting that I posted on X for everybody. I posted a video this morning on X. You don't have to watch it today, but because I'm going to tell you what I posted, but just a reminder for everyone out there, for additional content throughout the week, financial content throughout the week, at Kevin Horner CS, at Brent Moore CS, we post on X. But here's what I want you to do, Kevin. Go to December of
yes,
this
sir.
year and let's look at what the expectations are for. It's actually shifted from when I did it yesterday, when I looked at this yesterday. But the market is actually pricing in a greater chance of an interest rate increase by the end of the year from the Fed than interest rate decrease by the end of the year. And for all the talk of are we going to have a cut or not, for all the talk
Hmm.
of Kevin Warsh is going to be more dovish and interest rate Fed policy is going to change, the market, this is looking at Fed funds futures. This is the CME Fed Watch tool. So separate, it's not a Schwab page or anything here, but the market is actually saying, hey, it's more likely by the end of the year we're going to have a Fed funds increase there. Now, that doesn't necessarily correlate exactly to the longer term interest rate, number one. But why would that be? Well, if you think about the Fed has this dual mandate. maximize employment and keep inflation, at a low, steady level, hopefully, near 2% or something like that, right? Well, it appears right now that the concern in the Fed is more on the inflation end of things than on the employment end of things.
Mm-hmm.
And so, anyway, this has dropped a little bit from yesterday. You can see that actually at the bottom of the page there. The 25, it was 26% yesterday. Now it's 17%. But
Yep.
um, I thought that was really interesting, a little surprising almost in my mind.
I will completely agree with you, Brent, because of course, when was the last time we had any discussion of a hike? That hasn't been really on the table much. So the fact that it's even appearing as a potential between now and the end of the year might be worth keeping a close eye on here. I think that's a great call out, Brent. Thank you. Okay, so if we've got Russell moving higher, we've got Nasdaq moving higher, we got S&P moving higher. What about the leader, the stocks, the semiconductors? Just keep doing it, Brent. Again, try not to step in front of a freight train. We know things come to an end at some point, but if nothing else, we just keep creating gap levels that allow traders on the upside to just continually raise stops and elevate their exit strategies, don't we?
Yeah, it's been a nice run. Sox has been a leader again. Um, Not all tech. I mean, software's still, not doing anything with the Sox, the semiconductors are doing, but it's, uh, well, I don't know what to say, Kevin. I mean, it's, it's leading the market and it's doing really well. And we've had a good, excuse me, we've had a good earnings season so far.
Yep.
The numbers have been pretty strong overall. Obviously there's some good, some bad, but overall it's been a strong earnings season. And so, if the concern is market valuations, which is probably a valid concern, and forward PE ratios are pretty elevated right now. But having said that, it's certainly a lot better than if companies weren't increasing their earnings. And so far, companies
Right.
have been doing pretty well with increasing their earnings.
Yeah, exactly. And remember that while we continue to see these moves to the upside, big swings and big percentage returns, they are largely backed by earnings and guidance going forward and expectation. So the reason that we continue to see these rallies, as I see it, is that we continue to be told, hey, this is what we expect for the coming year. This is what our expectation of profit and revenue looks like, and those heads up, those keep coming with elevated and improved numbers, and that's why you keep seeing these moves to the upside in terms of price. Maybe not. Maybe it's happening more speedily than we traders would have anticipated, but nonetheless, it's happening. So as always, set your levels, know your risk tolerance, and so forth, which I think is imperative, Brent.
Yeah, to that point,
Yes, please go
Kevin,
ahead.
Kevin Gordon, a lot of you know him from Schwab, posted on his X feed, and I retweeted it yesterday.
Hmm.
S&P for 12-month earnings per share at a new all-time high, um, up by 27% year over year. So anyway, that's just kind of going at the point of, hey, earnings are going up, and that's a good thing, I guess.
That is, and it's definitely, and it's having an impact on prices, Brent. That's the thing. It's not that we're rallying on nothing. We're rallying, as I see it, on positive earnings and reports that are being digested positively and bullishly, as much as anything else. So there is some backing to this to a certain extent, but that doesn't mean that it should go exclusively upside, right? And that's
Yeah.
the takeaway I hope that people have here. Brent, one of the charts that we frequently bring to the table here in this class is the visual of oil, at least in the last few months here. So I'm going to bring in oil, VIX, and the futures here on the S&P 500. That's what we've got. So the futures for the S&P on the left, VIX futures in the middle, and we've got oil futures on the right. And you can see that there's been a pretty healthy pullback in oil. We had a pretty good swing here from 107 down to 88 and change. So we dropped a very speedy Let's see, that came out to about 18%. And now we've bounced here. You know, you've seen oil rally up. This might be simply a rally into resistance. We'll see how this plays out. But clearly, Brent, when oil drops, we get more exuberance as it relates to the S&P futures here. And we're going to continue to have to keep an eye on this. We know that there's a potential for elevated oil to remain. I think $100 a barrel probably comes in as that natural zone of concern for the broader markets. Over 100, it's difficult on the U.S. broad markets. But Brent, what are you seeing when you pay attention to this stuff here with regard to oil versus the SPX, or the futures on the SPX?
Well, I mean, obviously we have this inverse relationship there, but oil, it's not just oil prices, it's how long it remains at an elevated level. So oil we're at 96 now.
Mm-hmm.
Oil at 96, 100 for a month can be detrimental. A couple months can be detrimental. If that runs on for 4 or 5 months, it is much, much more detrimental to the economy and
Sure.
to the inflation picture, and to, just people's pocketbook, so to speak.
Mm-hmm.
And, all these sectors, all these sectors are impacted in some way or another by oil prices. Negatively, other than energy, I guess. But my point being, if the general trend is up, and obviously we've had a lot of volatility here, but if not up, if down, and this is just a 2-day chart, but if the general trend is going to continues to go down, that is going to be beneficial. It's how long we stay above the 90 level, and hopefully that that changes here soon. But that's just a key factor in there, is what I want to make on that. But obviously we just have this inverse relationship between the two.
Yeah, we do, and if one of the things we know, I think that a lot of traders are expecting, is the maintaining of this elevated level in oil, elevated versus where we were. We know that oil was dramatically lower by comparison. We were hanging out in the mid to high
Yes.
60s before the conflict began. So we've had a significant move, even though we are not trading at highs right now in oil. It's going to have an impact, and the potential exists even after the conflict has a resolution, assuming that it eventually gets one. Well, then the expectation of the market might be, hey, that's great for us, and yet it's probably going to take a lot longer to play out in the price of oil
Yep.
regardless. So don't expect oil to change its bullish trend immediately following such a resolution. I think we should be prepared perhaps for oil to remain elevated versus where we were before the conflict. I think the price discovery process will be a volatile one if and
Yes.
when we get to that spot.
Yeah, no,
So,
no doubt on that. And I've certainly heard commentators, and I'm no oil industry expert or anything, say things like, hey, when it is all said and done, and it will take time, like you mentioned, for it to resolve itself, but actually the oil situation is not a bad one if this situation were to pass and we give it some time. For example, something we mentioned, I think a week ago maybe, the UAE is pulling out of OPEC. Well, that should help oil prices overall in the long run, or
mhm.
maybe I think they've pulled out officially at this point of OPEC. In the short term, it does. It's just a little blip right now, but in the long run, that should help. Oil production is solid. And the economy is held up pretty well in spite of all this. And so, we'll see what happens. But the point being is, yes, it's going to take some time, even if we come to an agreement today. Oil's not going to go back down to pre-war levels anytime in the next any very soon, no
Yeah.
doubt. I'm guessing it would be many months.
Hmm.
But the point is, let's just kind of look at the overall trend on this, even if it is a little bit elevated.
I agree. Before we exit this chart, everybody, I want to remind you we are not advocating for futures trading, of course. We're just
Yep.
simply utilizing the future symbols here as a means of understanding the relationship between the three big ones here, the VIX, the oil, and the futures on the US S&P 500. So let's move back here to what's going on in a sector relationship basis. Scott, I saw some commentary about energy, and of course, if oil's dropping, you may expect energy to drop. Well, energy has been improving. In fact, I was one of those individuals who've been talking about energy a bit. You've had some confirmatory action for a lot of traders with 5 closes in a row over the confluence of the 50 and 20-day moving averages. Today, we're taking a pretty good move, 3.5% lower as we test the 20-day in here. I guess, Brent, as we often say, technical analysis is an art. It is not a science. I had my line drawn in at that same peak back here, and I thought
Yeah.
maybe that coincident with the 50-day made a lot of sense for support, but maybe it's not the 50-day, maybe it's the 20-day, and maybe it doesn't have to hold up at all. Maybe energy is not as bullish as it was looking just yesterday.
Well, again, I think, oil's not the only input there into the energy sector, but it's a big one. And so these macro events can trump, the technical analysis. That's true on
Mm-hmm.
individual stock levels too. If a stock comes out with good earnings or bad earnings, it's going to move the stock significantly, probably, regardless of what the support level is or resistance level. I would say that's more true probably even on energy than other other sectors right now, because it's the most geopolitically sensitive sector. And we'll see. Maybe that 50-day, not the 50-day, maybe the 20-day acts as a support level here. Time will tell on that.
Yes, it will. Brent, is there an interesting sector in terms of movement? I noticed today, I mean, we've actually had some big moves here. Maybe we should be checking on materials. Materials made a pretty good, healthy spot here. This was an interesting bounce. I was going to pull this up, make note of the fact that we've held support and have moved off of it here. But I was going to maybe move into some look at metals as well here momentarily. But any comments on what you're seeing out of the material space?
Well, we've seen that bounce there, and I think when we look at gold and silver, we're gonna, it will kind of be, it will confirm that big nice move today here that we've had on that.
Hmm.
But yeah, I mean we came down, hit a support level, and bounced off it. Now, around that 660 level, do we have some resistance? Do we have like a new channel that's forming here? Time will tell on that one as well.
Hmm.
And uh, if and when we get up there, but that would be a significant level on the upside on that.
Yeah, moving through 660 would be a real positive for this space specifically. Let's use, before we hit to those precious metals, let's also check in on the US dollar because the US dollar does have some impact here. And the dollar found resistance back at the end of March and pushed lower once more. So we've actually had a little bit of a tailwind on US markets as the dollar has retreated here. And if we take the dollar into a look at what gold and silver appear to be doing, here's the gold futures, once more, just the symbol of the futures quote, not advocating for futures trading specifically. But Brent, this has been a bit of a rough patch for gold relative to the rally up. Now, it did find the 200-day moving average here and bounced off of it, but we haven't really reasserted the uptrend just yet, have we?
No, we haven't. And I'm not sure if it's just a matter of, hey, the market as a whole has been doing so well. That's where people, you have a choice of where to spend your money.
Yeah.
And are you going to buy gold or are you going to take advantage of the equity rally, which is what we've seen for the large part? And I'm guessing that may be the case, but maybe people, I don't know, are people now starting to say, well, the market's getting a little frothy, perhaps. Maybe gold's the place to be. I'm not sure, but we are getting a nice bounce there, which I think corresponds to that bounce in materials that we've
Hmm.
had.
Well, let's see how the silver looks in comparison. a little more casual and a little bit more of a well, I don't know. It seems like this has taken a longer window to really balance out the huge move. The I guess we could call it a FOMO trade, really, couldn't we,
Yeah,
Brent? I mean, basically
yeah.
from December 1 at 50 mid 50s per ounce, it rallied all the way up to 120. It's going to take a while for that to digest, isn't it?
Yeah, just this shows when you have massive momentum on the upside, a lot of times it will shift and then it kind of turns into massive momentum on the downside, and that's what we saw. Now, we're past that phase. We're kind of in this more sideways-ish area. Breaking above those highs of about, oh, I don't know, 2, 3 weeks ago would probably be a key technical level for silver uh, in terms of getting the bullish, because we have a higher low. We'd
Hmm.
like to get a higher high here on this. So we'll see on that. But that's what we're seeing on silver. But it is interesting because for a while silver was just so much more volatile than gold. Well, not right now.
Yeah, not quite. And there's a pretty clear downtrend here, still looking at lower highs and higher lows. So you're kind of sandwiching in, if you will, a price level. And we could see a break of those at some point here. So I could draw a line through those recent highs, and traders might be looking as a possible breakout if we can trade above the downtrend line, or a possibility for a breakdown if you trade under the uptrend line. You can go either way. You don't have to trade before the break, though. It can be a little bit more instructive if you're simply patient and allow things to play out, maybe before taking action there. So that was a look at materials, at the dollar, at gold, and at silver. Brent, where next here, maybe on the sector tool, and when you're looking around at what's gone on here today? Anything specific kind of jumping out at you?
Well, I mean, it's kind of more the same in some sense in terms of the more cyclical type sectors are doing well. IT, communications, industrials are having a good day there. And we already talked
Yeah,
about
they are.
materials, but there's industrials, nice little bounce up on that, nice little gap up in a sense.
Hmm.
Kind of at a key level there. We'll see where we end the day and where we go from here. But um, that's a sector that has been doing fairly well. Industrials has been up. It's up about 6% over the past month, which puts it at roughly mid-range in terms of the sectors out there. But today, it's one of the leading sectors.
One of the leaders, I've been watching financials a bit of late. It has been improving. Might be a short-term floor put in here, Brent. I was looking at this
Yeah.
because of course, the broken down trend, which is pretty clear here, right? Once we broke that, we've managed to hold and make higher lows through here. And today we're back up above the 20-day after having danced beneath it a little bit. Maybe that uptrend line is less important than perhaps the lows we've tested on a horizontal basis over the last week or two. This looks like an area for short run support, but Brent, when you've got the 50 days so close to us, probably more likely traders are going to look at the 50-day approximation for trend management here on financials. Does that make sense?
Yeah, I think so. The 50-day is that it would take a decent little drop to get down that 50-day. That 50-day though right now is coincident with where the gap was, or the bottom of after the gap there. So that's I think a pretty standard support level that traders would look to on this. And the 50, sometimes we get the question of what moving average should we use? And we talk about
Yeah.
it, well, you can look at the past and see what it's bounced off of in the past. But there are some moving averages that are kind of more standard moving averages. And of course, when we say that, then people will look and say, well, that's the one that everyone uses. Well, no, but just the nice round numbers, like the 50-day moving average is a very common moving average that people use. The 20-day
Hmm.
moving average, which you have on the chart here, is a very common moving average that people use. It's not the only way to do it. I know a lot of traders that use 30-day moving averages. People will use 10-day moving averages. But in terms of if you're watching the financial news, probably if you're listening for what the most common moving averages that people use, well, I think that 50 is going to be one of those that gets referenced more than any, or at least as much as any out there. and people will use that as potential support levels or resistance levels.
Yeah, it's commonly used. It also happens to be not just that it's a nice round figure, but it also fits a window of time for the so-called swing traders looking to take advantage of moves one way or the other. So it's consistent in that regard. But I often say it too, Brent, the moving average that matters most is the one that's being respected most
Yeah.
by the
Yep.
traders who trade that position. And that's the concept of self-fulfillment, if you will, that we talk about with regard to technical analysis. The idea being that the more traders who rely on the detail of technical analysis, the more consistent the signals can be. But as always, discipline to your methodology remains super important to the process. So make sure you're staying disciplined as much as we can. Um, Brent, I think it's important we get to some individual stocks in the
Yeah.
news today to look at some charts. We had some big movers on an overnight basis. We heard from Advanced Micro Devices. I thought we could pull that up here. So let's look at AMD. Had a report that was very favorably reviewed by the market. But Brent,
Yeah.
I mean, it's way too early to define this candle. We know that it looks like a doji right now, but ultimately, this thing has been on an abject, just a rocket ship to the moon since breaking the resistance band back here.
Yeah. And this is a semiconductor stock. And we looked at the stocks earlier today, the semiconductor index, and it's been going crazy. Well, this is only helping the cause, I guess, with the gap up there on this. And sometimes I go into an earnings and I think it's already gone up so much. Good news has got to be priced in. Well, I guess not so much. I mean, given that we're up another 15% this morning here on this, we'll
Hmm.
see where we close the day. Right now, but 15% is 15%. Regardless, it's a good day on AMD, even if we close near the bottom of the trading range for the day.
Yeah, I agree with that, at least from a technical basis. We should share with you some of the headlines here. AMD was upgraded to buy from neutral at Seaport Research. They do have a target on the position, albeit no target is guaranteed to be achieved, as we often say, but the target here is 430 from Seaport. AMD was also upgraded to outperform from market perform at Bernstein, and they raised a price target of up dramatically in this case from 525 up to 265. So that is a heads up. And then AMD was upgraded at Goldman Sachs to buy from neutral and a target up dramatically as well, up to 450 from previously at 240. And so, Brent, as we said, the candle looks uninspiring right now outside
Yeah.
of the fact that it is substantially higher from where it was yesterday at the close. But the gap level, it was ultimately created in the after hours, and the new pivot point for the day might be an area for traders to manage risk. It comes in just under 392. The pivot point, of course, is going to take into account yesterday's price action. In this case, it's looking at all of that price action and giving you the value of yesterday's, if you will, the equilibrium price for the day as expected by traders, so to speak. So this could be an important level for short-term support intraday, at a level that bulls want to see maintain here on a short-term basis. But if we go forward and you start paying attention to this over the next few days, what you want to see obviously is the gap level hold. And there's no guarantee that it does, but that could be an area for traders to manage risk over the next couple of sessions here. So keeping an eye on that as well.
Yeah, going
Uh,
forward, it'll be interesting to see at the end of the day. Ideally, we don't close at the bottom of the day. But
that
and
would be
ideally
ideal.
we hold
That's,
the open price, the gap
Mhm.
price there. And so those would be the two things going forward, but we'll see.
Yeah, we know that the market's going to give us some fits and starts from time to time. It's tough to look at this as anything other than bullish in the near term, just given the nature of this move. And as we often say, Brent, it's the first hour of the day, so that candle is very much active, right? So let's not try to read too much into what's happening on an intraday basis by a one-day candle. That's going to be tricky to do. I did want to, we talked a little bit about about financials. I thought we should mention there was a Wells Fargo upgrade today. So let me put in Wells Fargo here, WFC. So Wells Fargo, similar chart, Brent. Remember financials peaked in late year 25, broke a downtrend with recent price action. This doesn't look quite as consistent as the financial space, but they were upgraded at Phillips Securities to buy from Accumulate. They set a target here at 98. That would represent about a 20% premium versus where we are right now. But Brent, this chart doesn't quite give the impression maybe of an improvement as much as the financials broad sector chart did.
No, it doesn't. And I mean, I'm just looking at the SPI. I mean, it's up a little bit above what the market SPX is as a whole here today, but I mean, it's up 1%, but kind of sideways-ish. I mean, it seems like it's fairly comfortable right now in this 80, low 80 level here on this. We could definitely draw some support under the lows of the past couple weeks there.
Yeah, right about
that
there.
would be a significant one. If we break below that, that'd be kind of bearish. On the upside, it'd be nice if we broke above those highs that we had about, what was that, 3 weeks ago or so.
Yeah.
But that's a little ways that, we'll see there. We got a little channel on that there.
Yeah, I mean, again, it's an improvement, but it doesn't stand out as cleanly maybe as the broad sector did upon initial review. Now, if you're looking for validation of support, one other note, some traders will mention the fact that, yeah, we brought the RSI into that low 40s and we got a bounce. This could be considered a support test as the RSI. But again, rely on price action more so than any other oscillator or indicator, I think, is the key takeaway here in terms of building out our trade process. I did also have an upgrade today in the software space. So let's look at software quickly. Software had been under a lot of pressure, but has been dramatically improving of late, Brent. And I say dramatic in the sense that, one, we've got a good move off of the lows. You notice we made about an 18% rally before settling in here. So software's been improving. Brent, a couple of key things. Huge candle right here that opened low on the 50-day and rallied. So it looks like software is trying to tell us that there might be a bottom having already been established in here. So first of all, talk to me about the software space and what might be at play here in this group.
Well, it was beaten up very, while the semiconductors were going up, software was going down, and it was just kind of in a sense the anti-AI trade, in the sense that the concern is, hey, maybe a lot of the AI, a lot of the stuff that the software industry does, think of things like Adobe or something like that, can be replaced partially by this AI revolution, so to speak. And so it was getting beat up, and I don't know what the right valuation of it is, but it really got really beat up. And the question is, when is the turnaround? Well, you have a couple white lines, well, even more than a couple white lines, but you have a couple trending down white lines that we saw there. And that, I think that was kind of a key level, because we had those lower lows occurring. And then I can't see the date on it, but there's we ended up with an equal low.
Right here.
Yeah, right there.
On
right
April
there.
10.
And so that's kind of like, okay, that's maybe good. We got a bounce from that. And then the break of that upper trend line that was going down, that's like the first sign, I think, where, hey, maybe we've reached a bottom on this, because it's tough to know where a bottom is.
Yeah.
It's only in retrospect, really, where the bottom is, but you get clues, and that's what we're looking for. We're looking for clues. And at this point, now we've hit some around that 69736 or level or whatever, right around that where the 20-day currently is.
Yep.
Is where we had some support on that, and that's where that if we can hold that, that's great. I mean, it's really confirming that maybe the worst is over on software.
Potentially. And then within the space, what stood out, I mean, we're looking at Palantir here because they got the upgrade today. Palantir upgraded at both Argus, or excuse me, upgraded at Argus with a two buy from hold with a new target at 190. So I wanted to bring this to the table for you all. You know, you could clearly see there's an area of support, but at least an analyst coming to the table and putting their neck on the line a little bit, Brent, because it's not like Palantir is running here.
Yeah.
So, you know, we give the analysts so much grief about upgrading when stocks are at highs or downgrading when stocks are
Yes.
at
Yeah.
lows. We should at least let, you know, give them a little bit of a benefit of the doubt here, given this one.
Yeah, no doubt. So that's, I know we're out of time, but key support level there on Palantir.
Yeah, for sure. As always, everybody, we greatly appreciate you participating and joining the class every day, or the 4 days that we're here, Monday, Wednesday, Thursday, and Friday. So thank you for being here. Big thanks to Scott Thompson in the chat. We always appreciate the management there. Follow us on X. If you like the discussion, hit the thumbs up button for us down below. We get this reviewed and then into the archive as quickly as we can. And that thumbs up button will help us out a bunch on the replay in YouTube. So with that, thanks for being here. Hope you all have a great rest of your Wednesday, everybody. We look forward to catching up with you again real soon.